What's going on, everybody? Blake here at Trade Tracer. As always, none of this is financial advice. Always trade and invest at your own risk. If you like this content, hit that like and subscribe and hit those links in the description for some free content. All right, let's go ahead and get it kicked off here. We have the S&P pulled up here in a weekly time frame. And one of the things that I want to note here is that we are still holding the cloud, which is essentially the 10 and the 50 simple moving average. So we've tested this cloud the past 2 weeks, but each time we've bounced off of that. However, we still haven't put in new highs to confirm these bounces. We're losing momentum, and we've just came from a massive rally from these lows that we put in back on March of 2020. So these are the COVID lows. So this is the weekly time frame. And I think it's important that we take a look at this weekly chart, because if we take a look at the tech sector, technology, the Qs, you can see that we are putting in new highs without MACD, which means we have bearish divergence. So what that essentially means, we have new highs with price, but not confirmed with momentum. The MACD is a momentum indicator, and I love to trade with it because when I have momentum on my side, I am going ahead and putting the odds in my favor, provided we have the price structure to support that. But right now, you can see last week I said, hey, we're breaking trend on the weekly time frame in the NASDAQ. So the tech sector has been under fire lately, and we've been seeing some more rotation into, your banks and your industrials and your energy sectors, which haven't received much love until recently. We've seen this rotation out of tech and into the industrials. Now, am I bearish? I'm still not bearish. I'm bullish long term. I am not calling a top, but I think it is very wise to pull back the throttle and have some other exposure in your investment portfolio if you're an investor. And we currently, members of Trade Tracer, are invested in gold. So GLD is the ticker that we are invested in. And you can see for good reason. We're closing above the anchored VWAP from the all-time high. We have a fresh MACD bullish crossover. And we're back above the cloud. We had an original trigger at 166.81. So if you're still long from this 166.81, just continue to hold versus your stops. Maybe you want to put a stop at last week's low or the previous week's low. Would probably be more realistic if you're looking at it from a trading technical setup, from an investment standpoint. So have some different exposure as opposed to just having equities in your investment accounts. All right. So one thing I also want to note is Bitcoin. If you guys follow me in crypto, I mentioned that below 50,000 things could get very ugly very quickly, and I even posted on Twitter about 10 days ago now that I was all out of my crypto, and for good reason. The chart broke. Right, we broke trend. We lost momentum. And people can say, oh, it's because of Elon's tweet, or it's because of China not allowing investors, or whatever it may be. But the reality of it is that price gave us the heads up, right? This parabolic move up, we can't continue to go parabolically higher forever. We had a distribution phase where we chopped around in this area. We broke trend, and then we got a MACD bearish crossover, which ultimately was the signal to say, hey, probably a good time to take some profits here. All right. So Bitcoin chart is broken until it isn't. So you guys know that I'm not the type of person that wants to buy dips. I'm more of a trader. So for me, I'd like to see price back above the 10 SMA. So once again, this is a weekly time frame. And if we take a look at the daily, you can see these levels that I had in here. This was my level below 50,000. Things could get ugly, and some other levels below. And it got really ugly. And I said, hey, keep a close eye on 30,000. It tagged it, and it looks like as we're coming close to tagging it again. If we lose 30,000, I think 20,000, 19,000 is in play. All right, so keep a close eye on that in the crypto space. Ethereum as well, very, very similar. Broke trend, broke the cloud, lost momentum, right? So that was a trade. We made great money on it. Those of you that follow us, we were long ETH from $17. So we got it long ETH right here and rode it all the way up. And then we got stopped out just below here. So right around $30, we got stopped out. So was a phenomenal trade for us, and that's all it is. It's a trade. We'll get back in when it's ready to do that. All right, so now I want to talk about the S&P on a daily time frame. So on the daily chart, the reality of is this. we've been moving sideways essentially since, for the past month and a half. All right. So there's been no real momentum for the past month and a half. And if you joined us on our Friday Zoom, we went into detail about this chart. But what's happening right now, we are in a no trend trading environment. And in no trend, the number one priority is always preservation of capital. Now, why is that the case? Well, because when no trend happens, there's no real direction. There's no real momentum to give you an edge. If you're not, one of the big guys, that can swing these markets. If you're just a retail trader, you got to follow the path of least resistance. And right now, the path of least resistance is to sit on the sidelines and wait. I know it's difficult to wait and have patience, but the best traders know that waiting is a big part of being successful and consistent with trading. So right now I am waiting. If we get back above Friday's high, so if we get back above 418.20, that would constitute an uptrend, and I would start to get long this market once again. But ideally, I won't have a ton of conviction until we get this MACD to cross higher. All right, so we really need to see momentum come back into our favor to the upside. And if we don't, we could be in jeopardy of coming back and testing this 408 level. And if we lose that, 405, and if we lose that, don't be surprised if we come back and have a decent correction. All right, so I just want to make sure that everybody is staying open-minded, not being extremely leveraged long, having some different exposure like gold or silver even in your investment accounts, and making sure that you're approaching the market with a pragmatic, realistic approach and having realistic expectations. All right, we've been in a 12-year bull market, and some things always have to come to an end, right? We have to eventually pull back, correct, whatever you want to call it. And I'm once again, I'm not calling a top, but I am proceeding with extreme caution. And the charts tell us this, right? Like I just said, we are in no trend. The priority is preservation of capital. If we get back above Friday's high, then I'll go ahead and start adding and deploying long market exposure. Maybe I'll take some SPY calls. And if that doesn't happen, then, we're in jeopardy of losing this cloud and maybe coming back to even some lower levels. So always approach the market with realistic expectations. Understand that the NASDAQ is lagging, right? We had looked like on Wednesday and Thursday, looked like we wanted to finally reverse. We have these levels in here. These are our roadmaps. Looks like we wanted to reverse on Wednesday and Thursday, but Friday was OPEX. So we'll have to see how significant this candle was on Friday. So once again, keep a very open mind. And since I have the Qs pulled up, I do want to talk about some of the major players in the NASDAQ, and one of them is Apple. So Apple, this is an anchored VWAP that I have from the all-time high. This is the volume weighted average price. So this is where the average share has changed hands since January 25th of 2021. This is the average share price where people are holding. And right now, the majority of people are holding at a loss because the average share price is essentially around $28.34, and right now we're at $25.43. And you can see on Friday we had a rejection from the VWAP. We had a rejection that coincided with this level, this 127.92, and we also had a rejection from the cloud. So this is the 10 and the 50-day moving average. So close below both of those on Friday. That's the type of price structure that I don't like to see heading into the weekend. But once again, last Friday was option expiration, monthly option expiration. That's OPEX. And so we'll have to see just how significant these candles are. Now, on Tuesday, I'm hosting a Twitter space with some phenomenal traders in the Twitter space. I highly recommend that you guys come and join us at 4 p.m. Eastern time. And I've scheduled it for Tuesday because I feel like Monday, by the time Tuesday is over with, we're going to have a clearer picture of what this market wants to do, if it wants to take another leg higher, or if we want to move sideways or roll over. So Tuesday at 4 p.m. Eastern time, come join us. We've got Jake from TrendSpider. We've got Xavier from Juicy Trades. We've got Tanner from Charting Options. We've got Dan from The Pup. We've got Jake from Transpired. I don't know if I mentioned him already. And we also have Braden from BT Trading, not to mention myself. So it should be a really fun time. Make sure you guys come and join us Tuesday on Twitter. It's going to be a Twitter space at 4 p.m. Eastern. All right. Hope this video was helpful. Content was helpful. Make sure you hit that like, subscribe, and follow on Twitter. Take care.